Here we go. I'd like to welcome everyone to the Hurley Investments Midweek Commentary as a presentation of safe option strategies. I notice a lot of people are here today. If you don't mind me asking, is Wednesday a better day than Tuesday nights? Wednesday nights better than Tuesday nights? Keith Anderson, good to see you. It's been a while since I've seen you in a chat. Steve says yes. Well, maybe I should start changing these over to Wednesday nights, huh? Either works for you, Maud. Abraham, how about you? Wednesday's better? All right, so I think what I'm going to start to do is move these more to a Wednesday night. And that'll give me the opportunity to free up my Tuesday, get this done. All right, guys. Let's get started. Again, I'm fighting off cold. Apologize if I cough in your ear. I want to go to an email that went out to clients. I got frustrated with a couple people, and it's not necessarily their fault, but I'm going to go to the almost end of January mid-cap recap. And I want to go over a couple different points. 100% agree, Rick. I want to go over a couple points that I want to bring out for you guys. One, to show you I go through the same frustrations you do. Those frustrations that you see in the stock market, we all go through them. Now, that doesn't mean that the world is going to end. I want to read a couple paragraphs here just to help you understand what I go through and why. I have a couple phone calls to make with some of you tomorrow. I wrote this last night, and a couple questions occurred over the last month. Let me go over the market comments, ideas, and numbers. I want to start off with an experience I had that I will never do again. About 4 years ago or so, I had a client or two talk me out of sticking with Boeing. They had been in it long enough, picked up tons of shares. Literally, we doubled our share count, but the stock had been in a range for years and not making money. I lost an argument, and I decided that to not show any preferential treatment, everyone would exit Boeing. So yes, of course, it popped from 75 to over 100 and now trades at 120. If I woulda, shoulda, coulda had that one back, I would trade it in, no questions asked. We suffered through the years of sideways moving stock to give up the growth by getting out. I spent my whole Christmas vacation spending hours working fundamentals, valuations, going over market growth expectations to make sure, on paper at least, right, on paper, we are in the best growth opportunities available for the money available to invest. I can't predict when the stock will move, but adding shares, we get huge jumps on profits. For those of you that are here tonight, how many of you collar trade? How many of you collar trade or even interested in owning stock and protecting it? Mod started to now. Rick does that. Good for you, Rick. Steve, Keith, Abraham, what do you think? Yes, now, good, Keith. It's a game changer. Ida, how about you? It really is a game changer. The reason why, and I'm going to be the first one to tell you, our new normal sucks. It absolutely sucks. It's frustrating. It makes me, it ticks me off something fierce. And if I was spread trading, I'd get these big swings and I'd end up getting out of positions, booking a loss and having less money to make money down the road. I collar trade. I collar trade because I don't see the big downswings in the market. Now, that doesn't mean that I'm not down between 2 and 3%. If anyone is in with Ford or NVIDIA with me, not NVIDIA, Ford or Netflix, I'm probably down closer to 9 or 10%, the market average. That's because those have fallen so far so fast. From 117 down to 93, hard one to swallow on Apple, on Netflix. Now, why am I telling you all this? It comes down to what I wrote in the second half, and I'm going to find that here. Quite often, markets are ridiculous. We'll wake up at 1:30 a.m. in the morning to see what Asia or Hong Kong market is closing at. If I step an hour, I can see the European markets and what they're like after their first hour of trading overseas. Why it usually dictates our futures for the morning before economic reports come out. So I can get back to sleep when I can, and I'm up 2 hours before the market opens, which is 5:30 Mountain Standard Time. I usually spend 2 hours soaking up information. I read anything and everything I can and then validate the numbers in the article. I see if I can verify their numbers to agree or disagree with what they say. I don't just blindly read the articles. I work the numbers out myself to see if the people that are writing these articles are full of crap or not. That is how I so often know something you've read, seen, or may have talked about in the market. And then I work some numbers, but that's not what I wanted to show you. Here we go. Add another 4% down for December, and our market has a correction of more than 10%. I hope as clients you have been able to appreciate the fact your accounts are not down 12 to 15% in the last 8 weeks. Yes, they are down, and that's a fact that's indisputable. But anything we make on the way down is profits as stocks come back. I really want to go over that point with you here today and why I spend so much time collar trading. I want to use Apple. Nope, I want to use Disney. And Disney has earnings on 2/9 after the market closes. Really quickly, Disney traded as high as 119.40-ish. Jeez, come on, Hurley. Out of curiosity, does anyone think Disney is going to go out of business? Anyone think Disney's going to go out of business? No, not for a long time, right? They're going to, obviously, they've got a bunch more Star Wars movies down the road. I never saw the risk in Disney that they should lose 25% of their value. And I'll be the first one to admit, I could have kept long puts on longer. I could have done a better job of managing Disney. But notice how my question talked out in time. My question was out in time for you. It wasn't, oh my gosh, Disney sucks today. It was, hey, out in time, Disney's going to be okay. Which means, what do I have to do to control my fears on Disney for the way it's acting in the short term? What do I mean by that? Well, let's pull up a quick chart on Disney. 1988 intraday, it looks like. So if I pull out a quick chart on Disney, I'm going to get this in our... When I pull up a quick chart on Disney, I'm going to look at it two different ways. The first way I always want to look at it is good old technical analysis. Level 1 information. Do we still use it? Of course we do. Do we keep it as simple as we can? Of course we do. In fact, I love Jeffrey's explanation on his free class, like an Ikumoku cloud and an Ikumoku cloud full. I think it's funny. I think it's hilarious the way people look at so many different things to try to find out what's going on in the stock market and why. Hold on one second. Okay. Here we go. So I'm looking at my chart. Bullish or bearish? What do you think? Kevin, you dummy. Clearly bearish. And it's easy to see. Crossover, crossover, crossover. I don't have my 5 and my 20. It's easily, you can tell it's bearish. Almost came back. Almost came back. Went into oversold territory. All the way down to 90.42. Now, it's kind of funny because we look at smart money, and what does smart money tell you? What is this on a fundamentally sound company that's gone from 119 down to 190? What does this tell you? Or what are you going to hear from smart money? The TV people, Jim Cramer, what a dork he is. What are they going to tell you? Someone take a guess. What are they going to tell you? What's big money going to tell you? And if you don't know, type a couple question marks in. Did I stump you guys? What's big money going to tell you? No growth. Okay. Mott says they're going to have a reason why they went down. Sell, 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 fuel the panic. Okay. You know, I've heard that, so I can't disagree with you. What I was looking for, though, is I would expect some of them to say that, sorry about that, guys. Come on. Give me a second. Computer's bugging the you-know-what out of me. Oh. Come on, computer. Let's see if I can't get... I'm going to go over to my bag. The joy of being on the road. Come on, computer. Okay. You're going to get someone that's going to tell you, hey, this is a buying opportunity. And they're going to tell you that because they need to dollar cost average, right? Anyone that bought up here in the 115 wants to dollar cost average. I love the collar trade because if they're dollar cost averaging, someone like me, a broker, is going to go out to you and say, hey, we really need you to find another $50,000 so I can buy you 500 more shares of Disney down here around 95. Because, you know, we all have extra money just laying around. When you collar trade, if you protected from 115 down to at least the 100, you made some pretty good money there, especially with your short call up here. 115 down to that 100 level, you probably made what? 10, 11, 12 of those dollars on the way down. A little more drop down now. If we get back down to 90, we're going to cash in those hundreds and roll them on down. But we've picked up quite a bit of money here. If we can pick up quite a bit of money one more time, why not add another 100 shares, 100% paid for, with those profits on those long puts? Collar trading gives you the ability to dollar cost average, because if you pick up another 100 shares, even if you got in at 115, these 100 shares are literally 100% paid for. It's like dollar cost averaging without having to spend any more money and having a zero cost basis on it. Anything on the way up on those 100 shares is literally 100% profit. Now, a lot of people ask me, Kevin, what if you buy a bunch of a bunch of shares from a losing stock? Well, obviously the key is to not be in a losing stock, something like Disney, like Visa. But can someone tell me, what do you do if the business is going under? What do you do if the business is going under? Maud says sell. Maud, if we sold everything off, we'd probably end up with a loss. But you know what, Maud? Most people are going to say that. Sell, Kevin, sell. Sell, 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 sell. I'm going to tell you something to do that's a little bit different. Why not add one more set of long puts? That way, if it goes out of business, yep. Even if it goes out of business, someone took that other side and will have to pay you out of that margin that was held from those short puts. They'll have to pay you. I mean, this is kind of an extreme example, but I've got it protected at 100. And if something dramatic were to happen, and the next couple months Disney went out of business, if I didn't even get it till I sold another one down at 40, and it was expensive and it cost me $10 a contract, even though I'm only spending $5 on my contract here, you're protected. The other side of that long put has got to cover from 100 down to where it goes out of business. And that 40 down to zero is profit. That pays for your 2 long puts and has a profit. You guys, if the worst case scenario were to happen and businesses started folding and going under, every single one of you, by doing nothing more than adding 1 more long put, would have more money than where you started at the end of the year. If we go through another 2008, where it's ridiculous and stocks are just falling through support levels, I kind of taught myself, as they fall through a support level, add another long put. On Apple, I had 3 long puts. On a 2008 year, by collar trading, you guys can literally walk away with an 8 to an 18% return in your portfolio. And guys, there's nothing special I did. I was just as lost as anyone else. We had never seen it before. It was new. We haven't heard of flash crashes. There literally were no market experts in 2008. But all of Hurley Investments clients were up between 8 to 18%. And you guys can do exactly the same thing if you need to. I had people ask me 2 or 3 questions. Kevin, why didn't we sell? The answer: I don't want to pay taxes until it's in our best interest. Long-term capital gains are always best, and I start sending out emails the beginning and throughout November to go over taxes with anyone who wish to have a carryover or just want to talk about the year. Kevin, why didn't you protect at the top and sell at the bottom? Answer: I can't predict the future and never have been able to. If I could, we would mortgage the house, pick the Super Bowl winner to live the rest of our lives in financial bliss. Kevin, why are you trading this way? Answer: because the new normal is a pain in the butt. I've worked too hard to live through a 50% loss, and we have another 2008, we will all be profitable while others lose half the value of their portfolio. My money is in the same positions that you're in, and it eats me alive to lose money. I hate losing. Kevin, we're down today. Portfolios, mine included, are down today. That is true. I understand that. But being down is not losing money. There's a big difference there. A lot of people ask me, Kevin, why don't I spread trade? And I do, but I do it within the confines of a collar. The real answer why I don't why I don't spread trade, to make it plain and simple, I'm too emotional. I absolutely hate losing. If you book a loss, you get out of that position, you suffered all the pain, and you have no upside eventually that may come in the stock. Guys, is any of this making sense to you? Is any of this making sense to you guys? Okay, get a couple yes. Generally speaking, all righty. Spread trading's for Jeffrey. Spread trading is not for me. Jeffrey will run circles around me spread trading. But that's okay. You find what works for you and you make money with it. That is the key. What are you doing that works for you? And how do you make money with it? I had a real interesting article that I pulled up. Investors, keep your itchy finger off the trigger. And I could go through this with you, but what's really interesting, and it's so funny, the big issue that when you go to cash, when you get out and go to cash, think you're going to buy at the bottom, you've got to be right twice. I cannot tell you how many times I have seen people literally go to cash, say they're going to get back in, and end up getting back in at a higher price than where they went out into cash at. My brother's a great example. Kevin going to cash. And by the time the market bounces back up and he gets back in, he's missed some of the upside potential. He's missed upside gains. The great news about a collar trade, you never miss an up day in the stock market. Ever. You never miss an up day in the stock market. All right, let's get going here. What's happening this week in our market and why? What's happening this week in our market and why? Fed spoke today. They kept rates the same, but they weren't dovish enough. Possible global slowdown. I'll buy that. Apple and Boeing drug the market lower. Boeing's going to make like 24 less planes, or they think they're going to deliver 24 less planes, primarily because the dollar's stronger. So that 25%, that 0.25% interest rate hike killed emerging markets. So these markets that want to buy our products are now paying more. We've got a stronger dollar, and Boeing said, hey, we might make 24 less planes throughout this year. We're going to lower our delivery expectation for planes, which would go along with 2 or 3 or 4 more interest rate hikes. Crushed, $10 lower today. Volatility picked up big time. Out of curiosity, VIX has to be over 30, right? Jeez. It's only 23. That's higher. We've got higher highs. Looking like we're putting in a floor at that 23 level. So people aren't scared enough? I don't know. I mean, markets are all down 9% for the year, basically, right? NASDAQ 10. Asia's down, or China's down 23%. I don't know how to put it, but it's kind of like we're going through an orderly shakeout. And yeah, I'll be the first one to say, I'm not sure what an orderly shakeout is. I don't know. Rick, um, good comment. Fewer people traveling. And that probably relates to the Zika virus. Terrorist activity. Or not enough money. I could say that for the United States, right? It's funny. Someone asked me the other day, where do you think people are putting all this money they're saving from their their gas prices? And I chuckled because I almost know exactly where mine goes. My health care insurance ran up $185 a month. $185 a month. Whatever profits I think I'm saving from my gas is just shifting over to higher insurance premiums for me. So, I'm kind of lost, in all honesty. Where will our market end this week? I won't even take a guess. I couldn't tell you. I wouldn't pretend to think I'd know. And Maud just asked, do you think that's why the consumer is weak? I'm not sure the consumer is that weak, to be honest with you. We're gonna find out this week. We got Visa, MasterCard, Discover Financial Services. I'm anxious to see if I'm anxious to see if people are I want to see what people are doing with their money. But if I had it my way, where will our market end this week? I think we'll have a bounce, but it's the end of the month. I think we're going lower. And I think we'll be lower by a 2 to 3%. Give me a quick second here. Hold on one second. Alrighty, thank you guys. Boy, I'm wondering if I didn't get a Dow. I will remember your question on Apple here in just a second. I thought I prepped all these so I wouldn't have to spend time, but I don't see it. Watch this one be Disney. If this one's Disney. There it is. All right, technically speaking on our market, we're obviously technically bullish, right? Just kidding. Technically bearish. And we're in no man's land. We're really in no man's land right now. If we took a peek, we're not testing the median line. We're not testing the oversold. We're just stuck in no man's land. What's usually here, although boy, we're awfully close on the MACD. Makes you wonder if we're going to get a bounce. S&P, same exact thing, right? Big money's looking at this going, we're toast. But we almost have that crossover. And boy, looks exactly the same for the NASDAQ. No one knows quite where we're going. If we're going to go lower or higher from here. S&P for the end of January, I'm going to stick. I thought it'd be down 5%, down 6%. We're closer. You know what? I'm gonna go for broke, right? I'm gonna go down 8%, 8.5 for January. What's on tap for the rest of the week? Well, earnings, Facebook and SanDisk did pretty good. With Facebook and SanDisk doing pretty good, makes me wonder if we might get a bit of a reprieve or a bounce. Not saying I know for sure, but no, futures are still down pretty big. But the NASDAQ futures are up. Unsure. And when I'm unsure, I make sure at least everything has protective puts on. Tomorrow, Abbott, Amazon reports tomorrow. Caterpillar, which will probably be horrible. Microsoft, Valero, Raytheon, quite a few that are coming across. My important ones are at the very end there. Hershey, Baba, Ford, and Visa. Friday, Chevron, Honeywell, Clorox, MasterCard, Whirlpool, I can't remember what they are, Xerox. Our big comments are going to be on Thursday, Bank of Japan announcement. It'll be interesting to see if they start to put more quantitative easing in. I'm going to tell you on Sunday, Japan and China have their PMI manufacturing numbers. It'll be interesting to see in China how close the CFLP number is to their own manufacturing number. Guys, at least have protective puts. Protective puts, and don't keep them in the month of expiration. Roll them out. Roll them out where you can. We asked a question, and I'd asked Apple. So I was going to move half of the money from Apple over to Facebook. Is Apple still a good buy? Yes. Looking into the end of 2016, iPhone 7, and valuations are cheap. So, is Apple a good buy by almost every metric? Yes, Apple is still a good buy. It's a tough buy. But Apple is technically speaking a good buy. Despite shrinking iPhones, there is not a shrinking iPhone situation. They just sold the most ever, 74.6 million. So there is not a iPhone shrinkage. They just didn't get to 7.5. They were off, or 75.4. They were off 800 million iPhones. But again, sold the most iPhones ever. They just couldn't meet analyst expectations. Analyst expectations, my opinion, analysts are absolutely worthless. Not worth anything. Waste of time. But I think Apple's just meeting this is a great example. A great example of the law of large numbers. Really, $39 is cash. Due to what they had, that $39 of their, where they close at, 93.42. So if I took 93.42, and subtracted out of it the $39 of cash, do you think Apple is worth $54.42 a share? Closed at 93.42, and with 216 billion in cash equals $13 a share of intrinsic cash value on outstanding shares. What does that mean in plain English? 93.42 minus 39 equals a stock value of $54.42. I think Apple is worth more than $54.42 a share. Sales. Sales always slows down in this quarter for Apple. They're going to sell between 51 to 53 million iPhones. Everyone already bought an iPhone for Christmas. This is their quarter that says typically it's going to be their slower quarter, in which case I'm not sure I see it being lower. Guidance is usually weak for Apple this quarter, Ida. Rick just made the comment, and I love it, Rick. Buffett said if a company has one analyst, they have one too many. Agreed. I mean, I've got a couple things that I have down here for you guys to see. I post these on my blog site for you. Apple, 3 reasons to stay positive. Really seemed pretty good. I mean, last week I gave you guys a bunch of stuff on Ford. This week I'm doing Disney and Apple. I guess I gave you Ford and Visa last week, huh? Apple is moving between a growth to a value company. They're the most profitable company in U.S. history. They're still doing great and bringing in tons of money on apps. Went from $1 billion to $4.4 billion for miscellaneous, which is the iWatch. They don't have iPay coming along, but I use it quite a bit. I just think they've gotten so big that they can't please anyone by being spectacular in everything. And that's the biggest, my view, the biggest view of law of large numbers. It's just that they've got too much now that they have to beat on everything. iPads, 16.1 instead of 17.1 or 16.4. Well, they were only selling 8 million not too long ago, and the fact they doubled it to 16, I think they're doing pretty good there. Hey, they're now buying back their old iPhones and selling their old iPhones again to emerging markets, to 3G and 4G areas. So they're now willing to buy your old phone and resell it at a premium price, something they've already made money on, something they don't have to rebuild again. No more fixed income goes into it, or fixed expenses, excuse me. And they sell that iPhone. So, I think they're genius. I don't think there's any. The reason why I was shifting half the money out, I had about 1.1 million in it. Billion, I wish. I had about 1.1 million in it. I was going to shift it out because I think the law of large numbers have caught up to Apple. I may not be shifting money out of it till maybe December when we have the iPhone 7. I did think it'd have a better quarter than it did, though. I honestly did think it would have a better quarter than it did. What surprised me out of all their numbers is they missed Mac sales over the Christmas holiday. They missed their Mac sales by 200,000 or 300,000, which is a little interesting. All right, guys, any other questions? If not, look for an email from Jeffrey. Maybe I'll do this more on a Wednesday night. I just chose Tuesday because it kind of gave me the opportunity to talk to you guys before the rest of the week, but maybe we'll head to more of a I think we're going to head to more of a Wednesday. Guys, take care. Have a good evening. I will have this over to Jeffrey, and my notes are always posted on My Hurley Investments or my blog site at myhurleyinvestment.com. So, guys, take care. Have a wonderful night. Sorry I'm a little congested tonight. I just traveling tired. I'll make it much better next week. You guys take care. Talk to you soon.